Happy dividend day. Let's see what the market gives us. Hey everybody, this is Bookie's Revenge. We're back with another 5-year, $500 Rags to Riches episode, and let me get my face down here, and we'll just kind of burn into it. So today was Tesla's payout date, so a lot of people are pretty excited about that. I personally haven't received it yet, so if I look here on my account details, go to payables and receivables, it just isn't showing up yet. So, and that's okay. Normally on this account, it seems to, for whatever reason, hit around 8 or 9 o'clock at night. And that's because the company pays a transfer agent then pays the broker. So my margin account has the payout, my cash account does not. So there's a little bit of a disconnect internally with Webull, and that's okay. This is a long-term thing, so I'm not too hung up on the small-term stuff. And you can see there's quite a bit of it today. Speaking of short-term noise, you can see here that NEO has kind of deflated back down to where I entered it, and that's okay again because this is a longer term setup. I'm not too worried about this, and it looks like we're starting to find some support here, which is okay. I can always just lock profits or re-enter if I want, but I don't want to have this be a speculative account where I have to, focus on buying and selling every week or every day or any of that stuff, because I know not everyone can follow along. So if I look at HTHT, I did add another share here. I think it was yesterday, somewhere around this level. I'd have to look at the orders. 31.50. So I have 2 shares of that, and my break even is just above the average price, where I plan to sell 1 share if I can get my mouse over it. So I'll sell 1 share at 33.77. Sorry, 2 cents above my break even price, and then I will have 1 share that has moved down from $35.99 down to 33.75. So I'm reducing my cost basis, reducing my risk exposure, all the good stuff all the way across the board. So you can see I did the same thing on CING. This is for those who are following along earlier. This is when I started trading around $13.55. So this is a speculative trade. I already locked a profit on it. Traded it a little bit on my larger account too. This one not so much as far as profit goes, but I am reducing my position. This one has a sub-million float share, so it's pretty good for when it gets volume. It just needs that volume. This is not one that I plan to hold for long term. I'm just trying to catch it for the next big rip, and then I'll sell it. But you can see here I started trading this one at $13.55. I had 1 share when I started. Bought another share, reduced, bought another share, reduced, bought 3 shares, reduced, bought another share, and then reduced again. So I'm back down to just 1 share. But my average, instead of being $13.55, is now $6.82. So when everyone else who bought at $13.55 is breaking even, I'll be sitting at a 98 to 99% profit. Okay. And tentatively, I always try to set a crazy sell order super far out. So right now I just have it set at $39, and that's only because there is a lot of potential for a stock like this to just run an insane amount. It's like 600% or something. I just don't want to miss it in case it does. But a more realistic target would be probably around $15 if it gets the volume that I want. But who knows, right? All right, so SFE, same thing. I didn't add any more shares to this one. I'm just looking to reduce. We can see that we're past the ex-div date, which means it's been adjusted, which is why you're seeing the shares down here rather than the level up here. And you can see this stock hasn't gone down since I bought it. It's just adjusted down. So even though you might see red here in the share P&L, it's okay. The only real red in this account so far for the month was the SPY trade that I took, and I locked the loss kind of on purpose, right? Because I want to rotate SPX and SPY month after month until I hit a loss. And once I hit a loss, I stop trading that one for the next month. At the end of the year, that's about $1,500 to $2,000 that I can use on taxes to reduce my tax burden. So it makes tax loss harvesting a little bit easier when you got smaller numbers at the end of the year. All right, JEPQ, this is just one that I plan to hold for a very long time. I'm not going to sell this. I don't need to average down. In fact, I've DCA'd up on this one a little bit. So I'm okay with that. Oh, same story. It's just a long-term growth position. It pays consistent dividends. I don't really want to do anything crazy with it. Johnson & Johnson's also on its way up. CION is past the ex-div date. Now I'm just looking to reduce and eliminate my risk exposure. So I have a share P&L sell order at 2 cents above my break-even. Looks like that may hit pretty soon, probably this week. Otherwise, I'm entitled to the dividend payout, and I don't really care about anything else. Maine is one that I'll be contributing to long term. You can see it's got a nice upward trajectory. RCAC is sort of an anomaly, right? I traded this one just on the run up and then I sold it. Then I re-entered up here just with the potential for another push. You can see it's got about 5 million float, but it hasn't gotten any volume, which is weird. It's got 4,000 volume at the most. So that's an interesting one. I'm just kind of seeing what's happening here, because normally when tickers do this, they sell off immediately. So just the fact that it hasn't moved up or down is kind of interesting to me. So it's worth, 10, 20 bucks just to see what's going on with it. I'm not too worried. And if I take a loss, it just goes into my tax advantage category. Small amounts really take the stress out of these positions, so I don't really care. It's just more interesting at this point. SCHD, it's a long-term ETF build, so this one I'll probably DCA up on. SSIC, you can see we're past the XDiv and the payout, so I don't remember if I added to this one. Yeah, I haven't reduced yet. This one I just added 2 shares so far total. Added one yesterday at 832 down here at the low, and then I have my reduce right here at break even as soon as it goes back up. Obviously, Clip and Tesla are the high yield ETF ones that we all know and love. They're my number 2 and number 3 positions, not number 1, because I don't want to have that outweighed. And once I hit about 100 shares of each, I'm going to stop trading it, because I just want to buy the shares and collect those dividends as long as they can stay afloat. Ladder, again, it's a long-term build. It's a financially strong company. I love it. But I'm already in a position and it's kind of around my break even. So nothing spectacular has happened just yet with this one. But we'll see where it goes. MBI is on its way to recovery as well. It's held the support level a couple times, and all it just needs to do is not blast down through it, and we'll be okay. There was an entry opportunity here last week on the 4th, and we kind of walked through that. Obviously, it went up. We sought a lock profit at 1-to-2 ratio. No need to hold it above that on these risky type stocks, because it can easily fall down and go against you. But I do have a break even here for 6 shares, just to reduce it. I just want to get that 1 share just to see where it goes. But I want to lock the risk exposure down on 6 shares so that I don't have the full position riding. And HTHT is another one. I just added a share yesterday. You can see that the first opportunity here, this one I just covered, $35.99 down to $31.50. My break even is $33.75, and I have a sell order 2 cents above that, so I can reduce my risk. So yeah, it's just kind of a little bit of speculation, but I'm not going too hard. I'm not looking at, charts and levels and going anything crazy here. I'm just looking at ones that are at least 10% or more down, and I'm adding where things kind of make sense, right? I haven't pulled out a single indicator yet, other than maybe Stocks Buddy for the initial buys. Mostly it's just level and supply and demand oriented. So with that in mind, you can see that our open P&L is now down $11, and the reason for that is because this NEO contract got deflated. That was at one point it was 80% up, so that's about 30 bucks, 40 bucks, which would put me net positive 20. There's also been some noise in Tesla, Clip, Johnson & Johnson. Tesla just got adjusted, for example, so that's going to show a red number on the share P&L. And there's been MBI, obviously, is kind of hovering a little bit. That was a somewhat sizable position for what it was. It's 40 bucks. It's not too bad. But it's mostly just Clip, Tesla, Johnson & Johnson, and this NEO contract. So those are kind of the only 4 that I have to watch for. But that's really that's the only sources of noise in this account, really. The rest of it's all just 1 or 2 shares at a time. So nothing to worry about. I'm just racking up the dividends time over time, and they will just continue to grow. And that kind of brings me to my next point here. The dividend tracker here. So you can see that the number has gone up from, I think it was like 270 or something. Oh my God, I'm white as hell. I think it was around 270 something, and now the annual projected income is 477. And as I've discussed on live streams, the number I care about is this yield on cost, 21.58%. This number is slightly skewed because I have special dividend positions, and some of them have scheduled dividends, which are small and insignificant. But this also kind of offsets the number up here to a degree, right? And we're seeing something that may appear to be artificially inflated, but in reality, it's much lower than the actual results will be, because this doesn't include compound reinvestment. It doesn't include additional contributions to the portfolio. It doesn't include the overall net P&L that I'll be raking in on these by trading them multiple times. So even though this number might seem a little bit higher than just my base stocks, it's actually lower than what we'll see over the course of the year. And then, of course, that's going to result in a higher compounded percentage. So just kind of keep that in mind. I know I've talked about it on live streams, but I want to make sure I get it on the episodes here as well, because there's a lot of different pieces that come together with this this sort of approach. And again, if we want to still speculate, we can. I mean, this is easy trade for CING. It's pretty straightforward, but I didn't really have to, right? I can. I took a SPY trade the other day, got my butt handed to me on a PBU live stream. That's okay, right? It's a planned loss. It's okay. If I win, that's just more profit. If I lose, it's a tax advantage. And it's just an if-then mindset that we can all adopt and have a good time. I know that one that everyone is kind of looking at right now is HRL, Hormel Foods. And this is one that we have loved for a long time, but we kind of fell out of favor on it because there were just better opportunities at the time. But this one is quickly making a comeback in popularity, and I do like it. Financially, they're pretty solid. We got some good analysis on the chart. And right now we're kind of in discount territory down here. So I might look to add this one as well. Not sure exactly when, but I think we'll probably hold this support level for a little bit. This is on the weekly time frame, of course. On the daily, we're already probably in a position where we're going to start curling up pretty soon. So if anyone's interested in that, in my opinion, this isn't a bad price, but I can't tell you what to do, and I can't give out financial advice. So I like it. I will add some. It's just a matter of when and how much. So probably just get a little starter position, and we'll see where it goes. But I'm going to end this episode here. Everyone have a great day. Make sure you guys take it easy if you're shoveling. Don't give yourself rhabdo or have a heart attack or anything. It's not a fun prank to play on your neighbors. So make sure you hydrate, stretch, all that good stuff, and we'll see you next time. Bye.